Hi, so it's Tanya here from Cannon & Co Sales and Lettings. So we're back again with Emma Kinsella from G3 Mortgages and talking about a different subject matter around mortgages and kind of what she does. We are hearing how useful you are all finding it, so please do feel free to pop in and drop in any questions you want specifically to be answered. And I think one of the things I hear, and I generally have the conversations with you, Emma, is generally when the Bank of England base rate goes up, people if it happens, then I generally get 3, 4, 5 people that day going, oh, my rate's going to go up, and do you know what I mean, different things. So I thought it'd be good for you to explain the different types of mortgages and amongst other things. So let's just talk about that in the first instance. What does it mean when the Bank of England increases their rate?
Yeah, so Bank of England, obviously, they've done the last 12 consecutive meetings we've had an interest rate rise, and that's due to inflation, and they're trying to curb it. We thought we'd sort of hit the peak. Potentially there might be a couple more base rate rises to come, but that doesn't necessarily impact interest rates for mortgages. So if you're on a fixed rate, obviously you're fixed and it's not going to affect you at all until you come to the end of your fixed term. If you're on a Bank of England base rate tracker, then it will, because that literally does what it says on the tin. It tracks the Bank of England base rate. But there's also discounted products which the building societies offer, which can go up with the Bank of England base rate, but doesn't always, because the building society will make a decision as to whether they want to go with the Bank of England and increase or decrease rates, whatever Bank of England does, or they'll just stay with where they are. And we find a lot of building societies, maybe out of the last 12 rises, in the Bank of England base rate, they've only passed on a percentage of them. So there's lots of different rates that you can choose from. At the moment, 5-year fixes are cheaper than 2-year fixed products, and that's an indication that the market thinks that rates will come down, and that's why the 5-year fixes are actually cheaper at the moment. My personal thoughts is probably it's not a good time to fix the 5 years, but it's all down to a client's attitude to risk and what they want and their budget, etc. In general, with mortgage lenders, whilst they do obviously take a note of what Bank of England does with interest rates, more importantly are the swap rates. So probably most people haven't heard of these, but these are the interest rates that banks buy money off the market, so off other financial institutions to lend as mortgage funds. So swap rates are more important, I would say, for a lot of mortgage lenders. And they basically, depending on what the swap rates are at the moment, you have 2-year swaps, you have 5-year swaps, and that's all linked into the fixed rates. That's how lenders price, basically, or price their products. And what we did find is when Bank of England was going up, inflation was obviously not coming down as quickly as they wanted. Swap rates were going up, and lenders were making very, very small margins to try and keep rates as low as possible for clients.
So I think it's interesting. I think the key thing is everyone's situation is so unique. It's not just, I've seen even a discussion today on Facebook going, oh, what's better for me? What should I do for this? And I've literally said, why don't you speak to Emma? And there's no obligation. No. But what worked for, say, even me would be different to Joe Blogs down the street, so to speak, because everyone is such an individual. Yeah. And I think we've all got our own experiences, but it's easy. There's just so many, say, experts and think they know. And that's what worries me a little bit, is trying to go to the right person, understanding everyone's needs and things.
It is. And it does worry me when people, they talk to, their friends or even on Facebook and get advice from there. I saw a few posts on Facebook where during October, when we had the Liz Truss budget and rates shot up. I mean, you had, the likes of Nationwide Building Society offering rates at 7.5%.
Yeah.
And you had all the scaremongering on Facebook. Oh, they're only going to continue going up. And you had people who, post on Facebook saying they had paid their early redemption penalties on their mortgages to fix at that point. when rates were the highest they have been since 2008. And it's scary because obviously, if they'd spoken to someone like me, there's not a chance. And, now is not the time to fix your mortgage. And as we've seen, rates are back down in the 4 and 5% mark.
Yeah.
And the market still thinks that they will come back down again. But it is personal preference. And I think it's always worth speaking to a mortgage advisor because they will ask you, what's your budget? What's your long-term plans for the property? And all of that factors into the products they offer you, because there's a lot more factors to it than just.
Oh, there really is, and you've seen, and we talk about this, and I know we keep going on about it, but there's so many estate agents now popping up, going, "I'm new, I'm going to counteract the market," and in a way, I suppose, to a point, I've done that, but it's only from our conversations going, right, what's going on in your town, what's going on, and I genuinely have been there. We're going through my buy-to-let rates at the moment and going through the conversation. So I'm not an expert on that, by all means, but we've got that, and I am no different to that buyer and seller, other than I've gone through and qualified and got the right people behind and supported, and then became good at what we do.
That's right.
And I think that's the key. We have these conversations all the time. You are the expert in this, and it's important that we follow through and listen. Like, it just amazes me. There's so many topics. We cover so much each week, don't we?
Yeah, still loads more.
I think it's useful. Do you know what I mean? So thank you for sharing this. I know people are finding it useful, and we will be back on next week. So thank you.
Thank you.
Bye-bye.